So for potential private investor members of the new compensation group, let's try and break this down in terms of where their liability would sit financially. Okay.
Fine.
Right, now I've looked at structuring the new one on the basis of the existing one.
Correct. Yep.
Okay. I don't think, looking at the sums of money involved, I think we have to clear at least £25,000 in a new action group to get us through pre-action disclosure.
Correct.
Or to incorporate the new group.
To incorporate.
Pre-action disclosure, investigation of evidence
Yes.
that comes out, resubmission back to council.
Barrister counsel's opinion, yes.
And stop.
I agree. At that point, stop.
Right.
At that point, we're hopefully even confident that we'll have a good case. But the next step is a big one.
Is the big money.
Yeah.
Right. And so at this point in time, armed with the council's opinion about potential success at litigations, forget disclosure.
Yes.
Now we're all in the know.
Yes.
Now we know we can nail them on 12 points, 15 points, 20 different things, whatever that is, right? Council are going to turn around and say, yes, you can. Yes, and this action is definitely worth pursuing. If council say that, the potential bill, just say it's £2 million in legal costs or higher. Yes, okay? But no way in heaven's earth are the private investors in that compensation group going to be prepared to underwrite that level of legal liability.
And the defendants will know that as well.
Yeah. So now, could you explain
Yes, I can.
at the event, after the event, insurance and also third-party involvement in proceedings?
There's lots of ways in which parties can fund litigation. The most traditional is they fund it themselves. We know that probably isn't appropriate because the costs are too high. Yeah. So you can you can try and insure against it. By that it means is that the people working on your side won't charge a fee at all. That's called no win, no fee, and they get their money back at the end of the case. With regard to the other side's fees, you can take out insurance called after the event insurance. Right. The problem with that option, John, is I can see a lot of disbursements needing funding. Court fees, barristers' fees, experts' fees. At present, under ATE and no win, no fee, there's no way that those disbursements can be paid.
And they could be like £100,000, £200,000?
£100,000 for an expert to look at 3 or 2 years worth of management of investments. So we then come into another funding option, which is called third-party funding. Here is where literally a hedge fund or a funder comes in and says, I'm very interested in funding your case because I can see a very big reward at the end of the day. So I will fund all your disbursements. What's more, I will cover you if you were to lose. At this stage, the investors are probably feeling quite happy. We've got a sugar daddy to fund the whole litigation to cover us. You know, you're anticipating. For that, they will want a piece of the action.
I don't know about being a sugar daddy. Sorry, don't just get that right.
Not you.
No, okay.
The hedge fund is the sugar daddy.
Term.
Okay. They'll want to cut in the action. That is negotiable. The higher the amount, the better we can argue.
The higher the amount they're going for, the higher the level of compensation being claimed.
Just as an estate agent will charge less as a percentage if the sale price of the house is higher.
Yeah, fine.
Thus, we can drive the hedge fund or the funder down the higher the amount at stake. And likewise, of course, the strength of the case.
But let's try and put this into numbers then.
And I'm going to give it. I give a warning. I've negotiated with a few. All cases are different. Their starting point, however, will be no less than 20%. They will say 20% of the final take. Okay. So if we recover 100 million, they will take 20 million of that, with 80 million to go back to the investors.
Right. So at the minute, investors are sitting on losses. Hard to know quite how big the losses will be once all of the recoveries have taken place.
Agreed.
But I wouldn't be surprised now if they didn't see a 60% loss on their total investment.
I see.
So I've invested 100,000. If I just wait for Capita to finally pay me out, I might get £40,000 back. Yes. I've lost 60.
Yes.
So what you're saying is, of that 60,000, that's what the 20% of the 60,000.
Correct.
Yes, so they're not asking for 20% of the total original investment.
No,
just the loss.
Just the loss. So in fact, it's even just the recovery. But if the recovery is the loss, it's full. It'll be 60,000.
So they've put in 100. They've got 40 back by winding up of the investments by Capita. They've lost 60. You're saying it could be 12 or £15,000.
Correct.
Yes.
Correct.
To recover the 60.
Plus they've already got 40. So
yeah, so in which case they're going to be walking out 60 less 12 is 48.
Yes.
So they put in 100, they get 88 back.
Correct.
Yes?
And the key about this is you might say that's a big return for the third-party funder, and it is, but the risk is also high.
Oh, completely. Yeah,
they are funding and clobbing. Also, it gives investors peace of mind.
Yes. Okay, so there's no, so just to get this right, we're not setting up a compensation group that is going to walk into open-ended liability on legal fees. Far from it.
In fact, we want to design something which is close to the opposite of that.
Yep.
If I could get a funder now, I'd get it. But right
sure.
now, a funder would say, actually, this is a bit not too risky. I don't have enough information. Yep. Come back to me in 3 months' time when you have that information. Yep. I'm having that conversation with myself because that's what we need to do. But you are quite right. When we get to the next stage, this is not open under. We go back to the SPV and say, can we have some more money, please? Yeah. We won't be asking for that.
Alan, just in terms of some of the things that we have unveiled, not we, sorry, myself, have unveiled and placed into the public domain, and the sort of things that make council take one look and think, well, you can't really do that if you're a cautious managed fund. So if they did lend $200 million to a single Greek shipping company, for instance, yes? Right. To what extent do you think that seems to go in breach of regulation?
Well, it's not so much a breach of regulation, that it might be a breach of the objectives of the fund as set out in the prospectus. And one of the regulatory duties is to manage the fund in accordance with the prospectus.
Yes.
So, funds can choose how risky they want to be. Yeah. These were not meant to be particularly risky. And one of the duties of the ACCG is to make sure that the fund is run in accordance with its perspective, its objectives, etc. So it'd be a case of saying, you knew this investment was going on, or you should have done. It was clearly way out of what the type of investments this fund should have been making was. Why didn't you do anything about it, or why did you actively sanction it, or whatever? Yeah,
and so issues around risk management are significant.
Yes.
Yeah. Issues around liquidity.
Well, again, it will depend on what the details of the prospectus said about how the fund should be run and how liquid it should be and how people should be able to get their money in and out. We really need more detail before we can start drilling down on those issues.
But it was a daily dealt FSA authorised fund, so liquidity had to be there.
Had to be there, and if it wasn't, again, that could potentially be a serious regulatory breach.
Yeah, okay. And there's lots of more of those. The reason I'm saying this, David, is people listen to, oh, now we've got to put up some more money, yes? But we need to get focus back onto the fact these funds have failed at investment level. Of that, I have absolutely no doubt. It's not my brochures that have let the side down. That's not what's gone on. We wrote what we were told and what we thought we could believe in based on the fact that the people telling us were the likes of Capita, for instance. Ernst & Young were the auditors. These are not small firms. And so we took great confidence in the fact that this is an FSA authorised product. It's dated out. So many of the financial advisor firms took the same level of confidence, and we've been shot below the waterline by the fact that management of this money has been squirreled away into little pockets in Guernsey cell companies, and no one knows what's gone on.
It's what this exercise is all about, really, is getting the information and the documents to prove that.
Yes.
You strongly suspect you know what's going on, and that it looks like it would be a breach of those regulatory duties. But really, to take it forward, we need to get the evidence. That's what it's all about.
There was, I think in the end, there were about 26 cell companies in Guernsey where all the underlying investments were being made. My point is this: you put on a table what those underlying investments actually were, and I'll show you exactly what went on. And there'll be more and more rule breaches coming through that exercise to build the case that goes to council. Or there aren't any regulatory breaches, which I don't believe for the first minute, but you'll have to say it could be either way. But I'm absolutely positive that we'll see an awful lot going on when we start to get the evidence in front of us, right?
I agree.
Right, yeah. Okay. So my view, very firmly, is investors should go to the next stage. We should incorporate a new compensation group in line with council's opinion, and we should force disclosure, because once we've done that, then it's laid bare. We can all see what's gone on, and then council can say, well, if you go to court on the basis of that, this is your chances of success.
I agree. Yeah. On a risk-reward ratio or basis at this stage, the rewards are very there, and there are no risks apart from the extra investment. There's no exposure to the other side's costs at this stage.
Right. Okay, I've looked at pricing up the the new compensation group to get us to council's opinion on evidence, yes? And I think that we need to have fighting fund about 20 to 25,000
I'd agree with that.
Right. I think what that means is that we're going to have to set a level at private investor level of about 0.2% of whatever they put in. So if they invested £10,000, right, then we're going to need 20 quid. Well, we're not, we need more, we have to administer it, so we'll have to set a minimum level, maybe £50. If they invested £50,000, that would mean we'd be looking for a cheque for £100. So these aren't huge sums of money,
No.
but they do build, and it's very important to build those funds so that we can turn around the new compensation group. 1 can incorporate, 2 can instruct you, yeah? 3 you can go to court, yep, with council, 4 get the information, 5 look at it, 6 really go back to council, then we're ready to go.
It's actually quite a, I was going to say cheap, cost-effective way of managing litigation or dispute at the moment.
Yep. Okay, so it's a bit of a recruitment exercise, which
it is
probably faces me rather than you, but almost definitely not you, me.